Your unique story, our global audience. Global One Media.
Welcome to Global One Media's exclusive Stocks to Watch series, where we provide you with one-on-one interviews with company executives, sharing insights into their unique journey. This is a platform to help make informed investment decisions. I'm your host, Ashley Berry, and it is my true pleasure to introduce you to Cameron McCall, Executive Chairman and CEO of McArthur Minerals, along with Joe Phillips, Technical Consultant and former CEO. The iron ore development and lithium exploration company is focused on bringing its Western Australia projects to production. They're listed on the TSXV as MMS, the Australian Stock Exchange as MIO, and the OTCQB in the US as MMSDF. Welcome, both of you.
Yeah, thanks, Ashley. Thanks for having us.
Absolutely. Always a pleasure. You know, Cameron, for our viewers who are not familiar with McArthur Minerals, perhaps you can share more about your mission, vision, leadership team, also the story of how it all came to be.
Oh, thanks, Ashley. McArthur, about 2005, Alan Phillips, who's long-term director of the company and Joe's father, had an option over the Lake Giles tenements. Now, they were acquired by McArthur Minerals, and at the same time, McArthur Minerals was acquired by the late billionaire coal magnate Ken Talbot. Over the next 18 years, 1,600 drill holes and over 90,000 metres of drilling was completed to complete a pre-feasibility and then a full feasibility study. Now, that's it in a nutshell, and it's probably better to hand to Joe now to tell you more about the project on how we've developed it to this stage.
Yeah, thanks, Cameron. Look, I'm Joe Phillips. I've been with the project nearly 14 years. I handed the MD role and CEO's role to Cameron last year. I apologise. I'm sitting on my balcony in Australia, and what you're hearing is the birds heralding in the new day. It's a wonderful winter's morning here. It's about 20 degrees Celsius, and the birds are having a lovely time, as we are. So I'll get on with the project now, but don't mind the distractions in the background. But as Cameron said, a bit of transition. In 2009, we bought Ken Talbot's position, 28% of the company. And since then, we've been investing quite heavily to the tune of about $120 million in bringing the project through to where it is today. It's a very large project. It's got 1.3 billion tonnes drilled out in resource in NI 43-101 and JORC. It's got 15 contiguous mining leases over about 800 square kilometres. So it's a very, very large project area. And during that period of time, we've cleared native title. We've cleared heritage, and we've done baseline environmental surveys to allow us to extract the hematite ore from the project. But those baseline surveys also, which took nearly 4 years, those baseline surveys never identified any rare and endangered species. So what I'm saying is really the project has been de-risked to us to a great extent. There's no discovery risk. There's no native title risk. There's no tenure risk in relation to mining leases, and there's no rare and endangered species. So, they're big ticks for this project coming into development.
Joe, I really appreciate you talking about the significant reduction of CO2. I'd really like to hear a little bit more about that, because I think, on everybody's mind is the environment and clean and green. And I think what you're doing is truly the way of the future. Like you said, 10 years ahead of the curve. So maybe you could kind of break that down a little bit. If you can't really talk about the process, I understand, but the significance of this and the work that you're doing.
Yeah, look, the answer is very simple. When we went out to do the feasibility study on this, we looked at best of breed, and that's the advantage that we have. And we took a good look at what was happening with our friends at Fortescue as well, because they've just brought their Iron Bridge, a magnetite facility, into production. And they used a lot of, I'm going to use the word leading edge. ideas in relation to the breakdown of the ores. So they used dry processing for the first half of the reduction of the iron ore. That's very significant because you use significantly less water. Now and water is an important resource, especially in a country like Australia. The next part that they looked at is they looked at renewable energy sources. And the way that we've designed our energy requirements is we can transition to a 70% green energy footprint. And the other energy we're using is not diesel, but we're using LNG or liquefied natural gases. So the two key inputs into the production of direct reduction iron ore is water and energy. So that those two key areas is an area that we've focused on, ensuring that we're keeping with the theme of producing a clean green steel component. Now, let me state it again. I mean, the world's been brought up on a diet of hematitic ores. As I said, it's all direct reduction furnaces. In this instance, we're looking at the world transitioning to electric arc furnaces. Now, the USA is already well advanced in this. Nearly 70% of steel reduction in the USA is by electric arc. So they're positioning themselves very well. 99% of production in China is with blast furnaces. So, they've got a long way to go. But look, over the next 10 years, you'll see major steel producers transitioning away from hematitic ores to direct reduction ores and using electric arc furnaces as opposed to blast furnaces. And that, as I said, will have a significant impact on CO2 emissions. The fact that people are transitioning to electric and renewable forms of energy as opposed to diesel generation is another direct impact on CO2 emissions. And finally, the ability to conserve water in the processing of magnetite ores is also quite important. So there you go. That's three ticks for the project.
Fantastic. Certainly the way of the future. Joe, you had mentioned that Cameron was working on this strategic plan for the board. Cameron, I'm sure there's a lot of activity going on there. Maybe you could kind of break that down for us and why what you're doing right now specifically for your company is important to investors.
Well, as Joe said, we have taken this project as far as MacArthur's capability can actually do. We now have, granted mining leases. We've passed heritage native title. We've granted mining leases. We've got a pathway to the port. There's capacity at the port. What the project now needs is someone to come and build it. We have been seeking partners that are highly experienced in own, build and run these things. And with that, they bring the financing. Now, we are at that stage. We have a couple of very interested parties having a very close look. One of the things that we did when we did our feasibility study, we took advice, and our feasibility study is for 3 million tonnes per annum. Now, we cut our cloth on what we were advised and that MacArthur could reasonably achieve in financing. The people that we have looking at it now have a much bigger idea, and when this actually goes into production, it may be much larger than the original 3 million tonnes. We've got 1.3 billion tonnes of magnetite, and this project is generational. It could go for many, many years beyond the original 25-year feasibility mine life. Now, those people are having a very close look at everything. And what I might get Joe to touch back on is when we were drilling this thing out, there's a lot of nickel there. And if I could get Joe just to touch on the nickel, because we have, say, about half of the drill holes for nickel.
Yeah, right. Yeah, Kevin, I'm happy to talk about that. Look, I've always been fascinated. As we were doing the 300,000 metres of drilling, we were getting nickel expression in some of the ultramafic units that we were drilling through. And whilst the board kept my nose closely focused on the iron ore, the nickel is a very, very big system across a 30-kilometre strike. And this year, whilst I stepped away as the CEO and MD of McArthur and handed that title to Cameron, I went back and commissioned a JORC NI 43-101 report in relation to the nickel system. And look, it's quite significant. We've got over 300 hits of anomalous nickel. That's greater than about 2,000 ppm, up as high as about 12,000 ppm in nickel in some of the holes. I mean, I've got nearly 10,000 metres of drilling there in diamond that we use for geotechnical. That's actually got visible sulfides in it that we haven't tested yet. So, look, the project has also the potential for a deep nickel system. It's in the right area. Australia's largest nickel deposits are found, within a sort of 300-kilometre radius of that particular site. You don't get 200, 300 plus anomalous hits of nickel grading as high as 1.25% if there's not a system of some form there. We actually back in 2007 drilled 2 holes, and actually we drilled 3, but I'll talk to 2. We drilled hole 10 and hole 18, and they came back with between 100 and 132 metres of continuous anomalous nickel graded, greater than 1,000 ppm. That's what I call a stringer. It's come from a deeper system, and at some point somebody will go out and develop that. But we've got a full technical report on that now, which is available. The other thing that happened, Ashley, and I might pass back to you, is in 2021, I spun out all of the non-iron ore assets out of McArthur into another company called Infinity Mining, and I chair that. If you're interested in hearing that story too, McArthur's the largest shareholder, and that's a value add for the company as well. So I continue to drive that pretty hard. We're up in the battery metal space, so we're drilling lithium. We've got rock chips at surface at up over 3%. We had a successful campaign that identified a fertile LCT-rich field with a whole range of light rare earths as well as spodumene. And we've just completed a nickel project, of drilling at Hillside this year, and we're going back in to do Brisbane Nickel, which we've received a co-funded with the West Australian Government Drilling Program award, and we're going back in to test a new technology that we've pioneered called ambient noise tomography, whereby we've imaged our pegmatites down to about 800 metres using ambient noise or passive seismic. So, we've got a really active program in Infinity Mining, and all of that will drive value through to the McArthur shareholders.
Terrific. And, as Cameron was talking about that nickel discovery, I have to imagine that was really such an optimistic find and a potential for something much bigger, as, nickel is essential in hundreds of thousands of products. So, fantastic news there. Just really quickly here, why do you both believe that this is the optimal time right now to invest in McArthur Minerals?
All the hard work's been done, Ashley. I mean, there's no discovery risk. There's no risks in native title. There's no risks in culture and heritage. We've done our baseline environmental surveys. We've got no rare and endangered species. Now, in a first world country like Australia, it's very, very hard, let me say, to tick those first 4 boxes. Very hard. And that clears the pathway to granted mining leases, which means that we have title now to those tenements for the next 32 years. We can't be overridden by other changes in government legislation. That's very important. You can have an ordinary project, but if you've jumped all of those hurdles, and invested all of that money and received all of those approvals and clearances, that puts you at least 10 years ahead of anyone else. And you don't know the Australian environment, but it's getting more and more complicated, especially native title and heritage and environmental approvals. So, the fact that we did those back in 2014-15 puts us ahead of the curve. Really, Cameron's got a very successful background in banking, and I'm certain that with his board, they are capable of attracting the right sort of partner. And I think he's had a good 8 months to do that. I'm hoping he's tracking, and that will be the catalyst for a very significant re-rating in relation to the Macarthur stock. Right. Yeah, look, I apologise. You're probably hearing some noise in the background. It's early morning here in Australia, and that's the wildlife just welcoming us into the day. So whilst it might come across badly on the audio, it is very welcoming for us.
They sound like very happy birds this morning, Joe.
They are, yeah. Over to you, Cameron.
Well, look, that about sums it up. We have quite a package here at Macarthur. Macarthur owns 22% of Infinity Mining, and Joe has spoken about where that is going. We've completely de-risked the iron ore project as far as we possibly can. That's now ready for the next phase for someone to come in and build and run the project. In addition to that, we have the nickel. One of our prospective interested parties in the project is particularly interested in nickel. So that is a very interesting add-on to this project. Why you would invest in this now is we believe that the stock is cheap. There's a good opportunity here. When you look at what we have, we can only see this going up.
Fantastic. And I want to wish you, Cameron and Joe, the best of luck on your crusade for your strategic partner search. Cameron McCall, Executive Chairman and CEO of Macarthur Minerals, and Joe Phillips, Technical Consultant and former CEO. Thank you both for your time and for sharing these exciting updates. We, of course, look forward to sharing more with our Global One audience.
Thank you, Ashley.
Thank you.